Hello everybody, Lance Martin here with Coldwell Banker Town & Country, and it is once again the beginning of the month and we are doing our March Market Snapshot and another month. It's just crazy how fast the time goes by, so we will jump right in. I don't have my clicker today, so I'm going to have to be doing some manual stuff, and we're frankly going to do a whole lot of clicking and pointing. I'll be a little disjointed here in some of our presentation here for the day, but anyway, we're going to get through it. So again, Lance Martin, Coldwell Banker Town & Country. And I am, again, going to be your host for the day. Our market snapshot, or excuse me, our market forecast is close. I know last month I promised you that I would have a date in April. We're getting close, so stand by. There's a lot of logistic things we're working on. The exact same QR code that we've now been using for a couple of years. Frankly, if you're watching this video and you're watching it on social media, or if you're seeing it on our YouTube channel, you don't really need the QR code because I have the link that goes to the QR code with all the stuff and all the goodies there. So we're going to jump in with what's in the news. I was debating today on whether covering this topic or not, but I do want to take a couple of minutes because I'm hoping that a good percentage of our audience, in addition to real estate agents and brokers and affiliated folk, are frankly buyers and sellers. So what I have up here is, I don't know if that renders very well on the screen, but that is a picture of a postcard, and I have down at the bottom, did you get one? You will. So what this is the real estate world is basically become the focus of litigation, and this isn't new, but it's certainly coming into the public in force. And if you've never heard about this, the chances of you frankly getting a postcard like this, and I'll get into the details here in a second, or getting an email, or frankly getting a phone call, or driving down the freeway and hearing an ad on the radio that basically says something to the effect, have you bought or sold a home in the last X amount of time? If so, you too could be entitled to compensation. Please call 1-800-CLASS-ACTION-LAWSUIT and sign up to receive 37 cents in the mail 7 years from now. So obviously I'm a little tongue-in-cheek here, but the bottom line is what this postcard says, if you can't see it, if you sold a home or paid a commission to a real estate agent, you may be part of a class action settlement. So why am I talking about this as part of our snapshot? Well, I am because I'm hoping that many of my audience are buyers or sellers, and the chances of you hearing something about this, by the way, these postcards were just being sent randomly. I thought maybe the people that were sending them, the litigation firms, would be a little bit more specific and say, hey, let's get a database and let's only send these postcards to people who have sold their house, listed their house for sale as a seller, and let's send it to those people because that's really who these lawsuits are attracting as the plaintiff. But apparently, at least the ones I've seen, they're not doing that. They're just sending blanket postcards out to everybody. So the gist of it is this. There's a bunch of litigation outside of California which has been going through the pipeline for a while, and it basically is challenging how the real estate industry is paid, okay? So why is that important to you? I'm just telling you right now because if you have some concerns about that, or if you get one of these postcards and you sold your house a year or 2 or 3 ago, you're like, hey, I might get some money back. Or frankly, Lance, you sold my house 2 or 3 years ago. You owe me money back. Well, if you feel that way, you call me. We're going to have a little conversation. But there's a whole bunch of stuff going on here in relation to this litigation. And quite honestly, I don't know that we as an industry, or certainly me as a real estate professional, can avoid it. Because very similar to what we've all seen over the years where, hey, you know, if you or anybody in your family has had mesothelioma, call this number. You're part of a class action lawsuit. If you or anybody in your family has lived in Camp Lejeune and drank the water, call us because you could be part of a class action lawsuit. As much as I hate to say it, and frankly, as much as I even hate to bring attention to it, it's entirely possible that you're going to get those exact same sort of solicitations if you or anybody in your family's ever bought or sold a house in your lifetime. Call us because you could be part of a class action lawsuit. So if this is a concern to you, reach out to me directly. More than likely, I'm going to be doing it's hard to explain this in 3 minutes, but I'm going to probably do a little video that'll probably be a half hour to 45 minutes and go into the details as to what it means. But if we've ever done business, we're solid. If you think we're not, you call me, or frankly, call these people, and then we can go from there. So at any rate, very little information on a very large topic, but quite honestly, the reality is these postcards have been going out for the last week or 10 days, and it's entirely possible you are going to be hearing a lot more about this in the days, weeks, months, and probably years to come. So it's very self-serving for me to say this. In relation to the consumer, this is not a big deal. This is ridiculous, but I will tell you, it is going to change our real estate industry. And if you are buying or selling and you're working with me or my team, we'll have a conversation about this because it's going to be important. And frankly, there's probably going to be some benefits and maybe some things that need to change. But at any rate, more on that later. So the only other item I want to talk about in the news is this rate volatility. The Fed is in front of the House of Representatives today and tomorrow testifying, Chairman Powell, et cetera, et cetera. And we're going to talk more about interest rates at the very end. But let me tell you, I feel much better about where we are rate-wise. I mean, today I feel good, tomorrow I'll feel bad, but it's just kind of how we've been. We'll talk a little bit more about rates and what's in the news because it's so important. And the numbers that we're going to look at today are going to feed into that. So I put my rainy slide up again because, again, as I'm driving into the studio here in Canyon Lake with Adam, it's raining. So at any rate, March 6th, 2024, we're getting our fill of it. So a couple of things on my slides. I was a little bit unprepared today, so some of the initial slides that you're going to see on the video today, I'm going to go very quickly through them because they don't have the current data on them, but the links do. So I'm going to go to the link, we're going to play around with the links, and I'm going to be working on the laptop here a little bit more than I normally do. Just so you know, by the time this video hits YouTube, Facebook, and all the places we put it, the link and the presentation will have the exact slides on them. So even though I'm going to go a little quicker here in the next 20 minutes on some of these, by the time you see this at home, you can click the video or the link and it'll have all the updated slides. So this is what I'm talking about. This is last month's slide, but we're going to fix it. So 5-year chart of median price. So in order for me to kind of get you the good data, I'm going to skip through this part and I'm just going to click right into this and we're going to take a look around. So let me open this up. These are our 4 counties, LA, Riverside, San Bernardino, and Orange. And let me just hover over them. Well, first of all, before I hover over anything, up, 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 flat, okay? Matter of fact, let's start with that one. The bottom line is San Bernardino. You can get your little key down here at the bottom gray is San Bernardino. And where is San Bernardino? End of February, which is 5 days ago, 500,000, as long as we're here. Riverside was 620, Orange County 1.325 million, and LA County 950,000. All of those are up, except again, I think San Bernardino's flat. So what I'm going to do is I'm just going to drag my mouse to the left, and it's, okay, so it was. So San Bernardino last month was 500, this month it's 500. All of the other counties up in median price. So okay, crashers, here we are. Once again, our values are doing pretty much exactly what we've talked about. So this is our median price for the 5-year window. And I think I'm just going to kind of blow past that, go into the next portion of our deck. And I'm not going to click on the 15-year. Well, these are the values. This is the part that I'll update that we just went through. This is the 15-year chart with the exact same data. So if you want that one, you can click into this one. It'll show it to you as well. Supply and demand. Okay, so what's going on with supply and demand? Before I click, actually, let me just do it. So we're going to click through here. This is our 5-year chart on supply and demand. Let's click right into it and see what we got. So here we are. Actually, this is the 15-year chart. Let me go back to the 5-year first. I think, actually, you know what? This is fine. We'll click on the 15-year chart. I'm just going to zoom in over here real tight. So what you're seeing over here, it's kind of a little bit of a mess because it's the 15-year chart, but every single one of the counties' new listing inventory down. I want to spend a little bit more time talking about this because there is news out there for those of you that are following this. Maybe you're thinking about buying, maybe you're thinking about selling, and you're trying to time it just right so that you can maximize whatever side of the ledger you're on. And you're like, oh my gosh, inventory started to go up in January. Maybe you're a buyer. And inventory started to go up in January, and we thought, hey, now it's going to go up in February, and it's going to continue to go up, and I'm excited because I want to buy a house and I want to choose from more homes. and then all of a sudden you're hearing or you're seeing that the listings actually went down in in February. Well, they did, but this is not an unusual phenomenon, okay? So if I take a look, for example, I'm just going to drag by the way, that's January. Let's just take LA County, for example. That's the one in blue. Just under 4,000 listings in the month of January. And if I drag it over to February, well, 3,300. So wow, that's not a small number of listings that decreased. So this is the deal, though. If I just start dragging my mouse over here, I got to put my glasses on so I can see this up tight, and I go back to last January, it might be hard to see, but let's just take LA County, for example, 3,500 listings, 3,485 listings in January. What happened in February? I roll it over one, and it went down, okay? Pretty much, if I just go back through this 15-year chart, let's just grab another one. Let's see if this one hopefully works for me. Let's go to 2017. Okay, this is 2017. Here's January, 5,000 listings, 5,099. And what happened in February? I roll over. Well, look at that. It went down. How about the other counties? Orange County's in red. 1,800. Orange County went up a little bit. How about Riverside? 3,400. Down to 3,200. So the point I'm trying to make is if you go back on this chart, and you can do this at home if you want to take the time, it's very, very common to see listing inventory decrease from January to February. What happens? I don't know. People get excited after the holidays in January, and then they list, and maybe they get burned out a little bit. And then the other people are saying, well, let's kind of get into the year a little bit. Maybe we'll do it in March, which, by the way, if you go through the rest of this chart, we'll see what happens when we do this report next month. March listing inventory should go up. So if you're a buyer or if you're a seller, I would fully expect to see more properties on the market, and quite honestly, if you're a buyer, more opportunities to basically maybe go out and see a few more properties. But not to go back to the prior chart that we just did, but what happened last month? Values went up. That's very, very common in March, and frankly, in February. I fully expect to see values go up in the month of March as well, and we'll see. We're going to come back to this topic when we talk about interest rates. Could an argument be made that says, well, wait a minute, Lance, the listed inventory dipped down because interest rates went up in February. Did they go up in February? Yes, they went up in February. Did that put a little bit of a wet blanket on the market? Absolutely put a little bit of a wet blanket on the market. But bottom line is you can't blame it all on interest rates, because you go back and I could take, like I say, if I go through this 15-year window, probably 11 or 12 of those 15 years are going to show listing inventory drop from January to February. It just is what it is. That's why I do this, because it helps me kind of build some charts and build some trends. Okay, so what did pending sales go? You guys know I'd get a little selfish when we talk about this topic. Our next chart in here are the properties that actually were pending. Let's stick with the 5-year chart. It's a little easier than the 15-year chart. So these are pending sales, same 4 counties. And, well, look at that. Pending sales went down in every one of our 4 counties. Interestingly enough, sales went down, but prices went up. Supply went down, prices went up. That part kind of sort of makes sense. But if you've got basically fewer sales, fewer buyers landing on fewer sale or fewer owners, someone might make an argument that says, well, maybe prices could have gone down last month. Well, we could make that argument, but that's not what happened. Now, I'm not going to do it, but if you want to do it and you go back and you say, well, Lance, what happened? Well, I guess I'll do it at least once. Well, what happened last January? So here's last January. Every single one of our markets between January and February, sales increased. And frankly, if I go back through the 5-year chart, if I go back to the 15-year chart, most of the time, sales, this is the number of houses that we're selling, the number of buyers and sellers coming together, they increase, okay? Well, that didn't happen this month. Why did that not happen? I believe 100% interest rates. We had interest rates that were in the low 6s, then we're back into the low to mid 7s, and that buyer population in the month of February said, crap, you know, Maybe I should have bought the month before, or maybe I'll wait, or maybe things are just too volatile for me. So in my estimation, this drop, which by the way, I didn't do this. This is January of 2023. If I move the mouse over, it's up. You just follow these little balls on each one of those lines. They all jumped up. Buyers and sellers coming together and opening escrows. And then, of course, we get to our current month. So this is where Lance gets to get his violin out, and I get to tell you how sad I am because I need to sell houses in order to pay my bills. But if you're a buyer or seller, should it be something that you're concerned about? I don't think so. You know, prices are still solid. Inventory is starting to creep up a little bit. I fully expect there to be more houses for sale next month than we have this month. And frankly, I hope that we're going to see more houses and more buyers and sellers actually come together, and we'll see more sales, which would make me happy. So, so why is all that happening? I'm going to click through this. And well, actually, before I was going to talk about interest rates, but before I do that, this month's Spotlight City is Long Beach. It's kind of home to me. I grew up in the Lakewood, Long Beach area. We've done a Spotlight City in Long Beach, but it was probably a year and a half, maybe 2 years ago. So all of those other Spotlight cities are available on the deck. So if you want to see those, just click on the link to the deck. And we've got, I think, probably 8 or 9 of them, maybe 10 of them. If you want a city that's not there, just call me and say, hey, Lance, what's going on in Menifee or whatever it happens to be? I'll be happy to get that to you. So what's going on price-wise in Long Beach? Do you think Long Beach trended with LA, Riverside, San Bernardino, and Orange County? Well, yes, it did. I click on it. I'm not going to zoom into this. Prices in Long Beach went up from January to February. Shocking. Just amazing how that works. So sometimes I wonder if I really even need to bring up new charts for you guys, if I could just pull up the exact same charts because they all look the same. What happened to listings in Long Beach? Do you think it tracked exactly like all of the other 4 counties we just did? It sure did. Listings went down in Long Beach. Shocking, okay? It's just amazing how these trends kind of play themselves out. And then last but not least, what were sales in Long Beach? You think they went up or you think they went down? Well, guess what? They went down in Long Beach. So again, if you're an agent or a broker like me, you don't like that. If you're a buyer or seller, do you give 2 rips? Probably not. And again, I think that's completely interest rate driven. There is one thing I probably should have mentioned. Let me go back to the pricing tab. People tend to like to know this. What is that price in Long Beach? Median price in the city of Long Beach now is $920,000. So that's quite a number. What was it, just for giggles? 5 years ago, it was $610. So if you want to go back to actually January, if you want to go back to February of 2019, $638,000. So in a 5-year window, we basically added a 33% value, give or take. You're like, wait a minute, Lance, what happened here? This was peak. So Long Beach actually peaked in April of 2022. By the way, for those of you guys that have been following this, when did most of our markets peak in value? Kind of during that massive COVID run-up that we had in 2020 and 2021 and parts of 2022. For Long Beach, it was April of 2022. Guess what? For most of all of Southern California, somewhere between April, May, June of 2022. So nothing's really changed. Long Beach pulled back a little bit, and now it's kind of marching back up to where it was. So at any rate, so that is our Spotlight City for March. So just to kind of round out our forecast or our snapshot this month, talk a little bit more about interest rates. I mentioned at the beginning of our video, the Fed was back in front of Congress and they're testifying. I'm not going to get into the tall grass on this, but there's been a lot of stuff going on. Are they going to do cuts? Are they not going to do cuts? What's the CPI doing? What's the PDE doing? You've got all of these indexes out there that'll just drive you crazy trying to figure out what's going on. This slide was from last month, from February. The slide for from January was this slide without the big red no sign on it. And in January, we said rates are generally below 7 and the 10-year bond is below 4. That was January. I'm feeling so good. Go back and watch the video. Then we got to February and I said, shit, now I got to put my big red no sign on top of it because in last month, rates were not below 7 and the 10-year bond, which is kind of what tracks these things, was not below 4. It was 4.2, 4.3. And that's completely correlated to what mortgage rates that you're going to pay on your mortgage are. Well, so now where are we? So this is this month. Well, guess what? I got to take the red little no stop sign off of it again. So as of 5 hours ago, today is March 6th, 2024. The aggregate or the compilation of mortgage indices across the country have now dropped again, ever so slightly, but again below 7%. So are you going to get an interest rate below 7? I don't know. Call me. I'll connect you with my lender partner, and we'll see if you got good credit and a good down payment. And depending upon what you're getting, you might do significantly better than a below 7, or maybe not. But on average, right now, we're back below 7. Talk to me tomorrow morning. Maybe we'll be back above 7. Who knows? And the 10-year bond is just hovering just a smidge above 4. It's about 4.1. And again, that's important if you track those things. So I'm feeling better. In part, I'm feeling better because Chairman Powell, again, I can't have a snapshot without talking about Powell. It's in front of Congress. If you watch the stuff, he testified like 6 hours ago. If you watch it today or you watch it again on March 7th, he's testifying again tomorrow, he basically said, hey, we're not going to do Fed cuts tomorrow. But the consensus was he was a little more dovish, which basically is just a nice way of saying, if things kind of project and stack up the way they appear to be stacking up, we're more than likely going to see interest rate cuts at the Fed level over the next, I don't know, 2 or 3 cuts over between now and December, maybe the first one in June. I don't know, but it does feel like we're in a little bit of more of a stable marketplace. So if you go to Optimal Blue, it's got you at 6.8. The charts are there. You can click on my thing and you can see it. I did do a 6-month chart with Optimal Blue. I'll pause on this one for a minute ago. So this is where we were. I mean, we were almost 8% in October, almost 8%. So we won't talk about the run up from 3% to 8%, but this is where we were 5 months or so ago. This is where we are now. This is that just below 7% number. And then again, between January and February is where we had that run up. We were getting kind of excited here in February, and then we started running back up. And are we running back down? I don't know. I hope so. I just put a friend of mine in escrow, and maybe the timing's good. Maybe they're going to kind of catch the rates on a little bit of the downtrend. So this is Optimal Blue's rate. If you go to the old Google machine, the rates are going to be higher. It just is what it is. This is a $500,000 loan, 20% down with a 750 FICO, 7.3. Again, your rates will vary. And this is the one that I love. This is Mortgage News Daily. I love this app. And this is where I track my 10-year bond. This app is free. You can get the information here if you want, or you could download this on your phone. And if you're into that sort of stuff, you can click on it all day long. But the bottom line, I think the interest rates are a little bit more favorable. If you are a buyer, and you can afford a 7% rate or somewhere in that neighborhood, and you find the house you like, buy the damn thing. You know, buy the house. You know, it's funny, I was listening to somebody, I need to attribute this to him, and his name is blanking on me, but I really liked this. He was like, hey, if you have to ask me, should I buy a house right now? The answer is no. You're not ready. So, and it's kind of interesting because I get that question a lot, and as I've been doing this 36 years, 37 years almost, good Lord. And I must have had that question asked to me thousands of times. And as I was listening to this individual say, if you're asking me or another realtor, real estate professional, should I buy a house, or is it a good time to buy a house? His answer was no. If you ask the question, the answer for you is no. And I thought, you know, that's probably pretty accurate, because if I go back in time and I look at most of the people who asked me that question, they did not buy a house at that time. And they weren't ready at that time. So his thought was, which I guess I'm subscribing to, is if the house is right for you and the timing is right for you and the time in your life is right for you and the neighborhood is right and the price is right and you can afford it, then it's the right time, okay? Everything else will wash itself out. Prices going up, prices going down, interest rates going up, interest rates going down. Those things will impact themselves. Not that you can't ask the question, but at any rate, so there we are with rates. I'm feeling more like I did in January than I did in February. Again, we'll get the date out on our forecast. Again, we are Coldwell Banker Town and Country. Drew and Drake and myself, we want your business. So if you made it to the end of the video, there's my pitch. If you're buying or selling or doing anything in the real estate world, we want your business. We also want your escrow business. And on the property management side, we do business under Cobalt Property Management. We can help you with your rental. We can help put you in a rental. If you're not ready to buy, but you need to move and you want to rent, call us up. We'll help you out. We're doing business all over Southern California and a lot more in the low desert as of late. And I think, oh, this is the Martin Group, and we are done. So thank you very much for your attention. Our March 2024 Real Estate Market Snapshot is in the books, and we will see you next month.